And we're live. Content provided at the event is for general information only and not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and no guarantee. Future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These opinions and thoughts are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC, and investment advice is offered through Gimbal Financial, registered investment advisor, and separate entity from LPL Financial.
Good morning, Amanda.
Good morning. How are you guys?
We are doing great, I think.
Can you, I don't know if I can hear you.
Can you hear me?
Yeah, you got to bring it closer though.
All right. I was at the coffee shop this morning, sitting outside before the rain came in, and there was a group of guys, maybe 10, 15 years older than me, a whole bunch of them gathered around, and I couldn't help but eavesdrop on their conversations. They were talking inflation, tree farms, adjustable rate mortgages. I couldn't believe my ears, and I was thinking, boy, these guys are doing my show prep for me today of what's important to America right now.
That's awesome. That's awesome. I'm in charge of prepping for the show at this desk, and I was delinquent today, so we're working from one microphone. So hopefully y'all can hear us.
I'm not even sure it's from that microphone, but we can hear you.
Okay, that's good.
Good.
Well, happy Friday. Happy Friday before Father's Day. You guys got any plans? Any exciting things happening?
I think we're sending our kids off to camp on Father's Day. And so thanks, Pastor Rusty, for taking our kids off to camp on Father's Day. Bless you. Have a great time.
That's a relatively inexpensive babysitter you guys have
That's
there.
Right.
Yeah, that's some downtime.
Awesome. Well, what are we talking about today? Can you hear me?
Can't hear us.
Barely, but yes.
Let's try a quick fix, see what happens.
Oh, that's better when you move closer to the screen.
We'll just do that.
All right. We'll turn it from me to Doug, and we'll plan better next week. Sorry about that, friends. What do we need to know today, Amanda?
I was totally relying on you guys. I have absolutely nothing prepared besides my Happy Father's Day contribution.
So I think we decided that we wouldn't put the COVID tracker up anymore. It seems to be behind us. So there's new opportunities. If you want that data, we can get that available to you with the link where it is on the internet, but we're going to look to the future. Doug, he was pointing out that there was conversation, inflation, lumber, and a variety of other things. And so what were you wanting to say about that, Doug?
Well, I think from there's a couple things, from a take action standpoint. If you're somebody out there who's got a mortgage that's not fixed and it's an adjustable rate mortgage, maybe give us a call and let's talk about that. But there's some parameters within your adjustable rate mortgage where it can move one way or the other within some percentages as defined by your contract. But now might not be a bad time to blow the dust off that. It's probably been in your favor if you've had it for a little while. But it may not be in your favor in the future. And so that might be something to take a look at. That's what the guys were talking about. I so badly wanted to jump in there, but I didn't do it. But if you do have one of those, and I know those were really popular, it is definitely worth having a conversation over it. But inflation in general it's just been wild. I don't know if you guys saw this or not, but we've talked about lumber prices on here before, and there's a lumber's future index, which is pretty interesting. And since May, lumber has really come down. it's down about 40% from its highs in May's. And I jotted down some numbers here. Um, yeah, since May, let's see. Yeah, futures are down 40% since May. So that's been good. If you've built a house or if you've looked at buying a house, those prices have really escalated mainly because of the underlying commodity. And so this could be something where this fall, third, fourth quarter, we might see housing prices even come down a little bit just because the material cost alone are dropping. So that's good news for some, bad news for others. But several of the other commodity prices have been coming down a little bit too over the past couple of weeks. And so always money in motion and for different reasons. Part of this is the inflation topic, and then another part of it is just supply chain. And that supply chain has just been wild coming off the pandemic when nobody spent money. We all pretty much hung out at home, and then supply chain changed, and money was spent in different places like lumber, building decks, houses, add-ons, whatever improvements. I mean, even if you wanted to buy some shelves, they were really expensive. And so we see the supply chain starting to catch back up, and that could be very helpful for investors and just people buying stuff in the third and fourth quarter.
Yeah, I had somebody stop by and sit on the front porch a while ago. They just bought some property, and we're going to build a house on it. And we were talking about the lumber prices and the difficulty of being in the housing market today, because you could sell your house because of those inflated prices, but you've got to go back out and buy something else. And this particular person, his friend, was looking to buy a house up close to where our office is, but when they were putting in the bids, people kept bidding it up, and then part of the contingency of the bids was that they wouldn't even have a inspection. And that's when those kind of things happen in life, that's probably a good time to step back and consider what's going on. Is this an emotional decision that I'm doing, or is this thing really legit? And buying a house without an inspection is a good way to get yourself in a lot of trouble. And so it's time for caution. I was having a conversation with Caleb this week. The supply chain has disrupted used cars, and so my 18-year-old's car is worth $2,000 more than what it was when he got it, and it's not a valuable car. And so I floated the idea to him. He leaves in 60 days for college. Wouldn't it be kind of an interesting idea just to go ahead and sell your car and let the supply chain get kind of stabilized, and then turn around and get something better once it stabilizes? Because once the new car market frees up, there's going to be such a supply of used cars that those prices are going to drop pretty dramatically. And this is what investing is like. This is what thinking about the future looks like. It's not getting stuck in the moment, but thinking about, how do I take today's data and use that to my benefit? And so trying to teach an 18-year-old that is maybe useful for some of you. If you've got old cars sitting around your property somewhere that you need to sell, now's the time to cash those bad boys in.
Yeah, I couldn't agree more with that. We've been toying around with that same idea with our van at home. What do we do with our van? Well, we just keep driving it for a little while. But this has been true, whether it's lumber, whether it's corn, beans, um, copper, ammunition. Ammunition has started to come back down. And so that's good for all you guys who like to go shoot, and gals who like to go shoot.
That's right.
So there's been all kinds of, supply chain disruptions that I haven't really seen in my lifetime. I mean, it's been pretty remarkable. There'll probably be studies about this going on in the future. But the other thing that I think has been pretty remarkable on just buying and selling is to see some of the technology stocks moving back. And I think was it last week when or maybe it was 2 weeks ago. We didn't really focus much on the market last week, but 2 weeks ago, we talked about where the NASDAQ was and comparative to its highs in February. And it's been good to see some of those stocks that are in the technology space start to come back on. And yeah, Keith's pulling up the. Are we looking at the chart right now?
Yeah, that's the NASDAQ.
Okay. And so as we look at this chart on the NASDAQ right now, it's been good to see some of this come back. And even if you've had money in some of the major indexes, you've got some exposure to some of the leading tech stocks in those indices. And so if it's your 401k, your accounts here, wherever, you've had some exposure. And that horizontal line that Keith just drew, the red line across, is telling you that, we're back up to the new highs. And how does it get to those new highs? Well, it gets there from the underlying stocks within the indices. And some of those underlying stocks have just been looking a lot better lately.
Yeah, and when you're trading in the market like this, that you can see that line I drew across the top there is kind of what we would call a ceiling or resistance, or that's where if you're in a tug of war, that's where the one side is pulling against the other. The sellers are pulling against the buyers, and a lot of times when the market's trying to figure out what to do, it may hit that level, bounce back down, and just keep butting up against it to decide whether it wants to go higher, or if it's just going to finally wear out. Just like pulling on a tug of war, it's going to finally give up and let the other one win. And so that's what's going on there. The pattern is showing some resistance. It's not giving up to try to get to the new high, and we've seen this line right here has kind of broke out from where it was. This line that I just drew the red on shows you how the NASDAQ is operating relative to the S&P 500. And so the first part of the year, the S&P 500 and some of those stocks like materials, airlines, and things like that were doing really well. And the technology stocks were performing less well. and so if you had a portfolio of NASDAQ stocks and things that where the leaders, like last year's leaders were Tesla and the FANG stocks. Those, if you pull up those individual stocks, you'll see that they didn't do so well through this period of time. And so that's a very kind of welcome change for last year's leaders to kind of get some gas back in there. We'll see if that relative strength keeps going on, and if we do break through to new highs. Normally, the summer months starting in July don't do that, and so it wouldn't be completely unpredictable if that kind of hit that line and bounced closer to that diagonal line that I drew at the bottom there. But we don't know. Nobody knows the future. There's a lot of unusual things going out there that would cause you to kind of stop and ponder for a minute.
While on the phone yesterday, I was on the phone with a client, and he just said, "Hey, what do I need to know right now?" And I think one of the key things for people right now is, yeah, the market is bouncing. It's been churning. It's hard to know who's leading and who's not. Starting to see these NASDAQ stocks come back on. But will they actually break out? They haven't really done it quite yet. And so I think what you need to know about your money and your portfolios is now's a real good time to take a look at it and see what type of exposure you have and where it is. And some of the smaller stuff has been coming on, looking a little better. Some of the foreign stuff, these aren't blanket recommendations for you. This is an invitation to look at it and look at it with somebody, your advisor, and go over just see where your risks are. Because even though the NASDAQ's been looking a little healthier here lately, like Keith said, it's meeting a point of resistance, and really positive things could happen from that, or negative things. And so just having your money with risk exposure in the places where you want them to be it's a good time to take a look. Could I shift gears and talk about inflation a little bit?
You just did.
Okay. That's right. So I don't know if it's where I am in life, my age, or what it is. Keith talked about his son Caleb and how he's getting ready to go off to school. When I first started in the investment business, it's probably right around the time when college accounts were coming on and becoming a little more popular. There were some vehicles, some legislation changes where you could have money invested and have some tax benefits too. And so I started to look at college costs, and I was curious to see if college has gotten not cheaper, but if the inflation rate had come down
For tuition,
for
right?
tuition, yeah, for mainly tuition. And so I think what's going to be very interesting in our future in the next 10 years, for these kids who are in middle school and in high school right now, is what is tuition costs going to look like, and is it still going to outpace inflation? If inflation's been since the mid 70s, let's say it's averaged 3.5% or so, college costs has been 6.5. And so will that value continue? Will people support that? I don't know, because you have lumber going up. That could be a supply chain issue. But then you have like real inflation. And I don't know that we've really seen that anywhere else besides college and healthcare. And so I think it'll be real interesting on your dollars if inflation does start to kick up the way the government defines it, and you have supply chain issues on top of that. It's kind of a double hit.
It makes me smile because I'm on the home stretch of the last Tyner student going to the university, and I've seen the inflation even in that short span, which affects us as we help our kids with their college expenses. And that 3 percentage point difference in inflation is not a 3% difference in inflation.
Right.
It's almost 100% difference in inflation. So what happens if you do the math is you start having a gap between the reality of something and its comparative assets. So if you compound 3% more on the cost of education for 30 years, it's gone to basically almost 100%. 33 years would be 100% more expensive to go to college than it would have been 33 years earlier. Now, that's on a real basis. And so consequently, what happens to the education industry is their value drops every single year that their cost is greater than the cost of inflation. And so then it makes processes like considering trades, considering different ways to get into the job force more interesting. I want to give a shout out to Murray State. They do a nice job of keeping their value there, and probably Purdue. Mitch was able to flatten out the cost of tuition, but there's other costs for the students. So you've got your housing costs, your books costs, and those things too have gone up with inflation. So the reality is the students are going to have to become more aggressive in making their own choices about what they do. They're not going to have that simplicity of saying, I think I want to go to college because it'll get me a job. And that's been played out in the media plenty already recently. But what I learned on my ride down to Murray this week is Caleb is going to graduate in 3 years. Well, that was his effort to combat inflation. And part of the reason that he combated inflation himself that way is we've given our kids a stipend amount that we're going to contribute to their college. I decided this year to inflate it for each one of them, so they're not getting an equal dollar amount, but an equal inflated dollar amount. And so when Caleb knew that and he saw what the bucket of money was, he was incented to let the university know that you're not getting all my money. And I think that's how this whole challenge is corrected going forward, where you have a horse in the race, you're going to make the decision yourself better than just assuming things are a certain way.
And that is a really cool approach. And I know several of you moms and dads out there, you've been squirreling $25 a month into your 529s since baby hatched. And so, yeah, you could take that principle, present that to your 17, 18-year-old and see what they think. Because, man, if you look at some of those college 529 accounts, they've done great. And you might say, well, if you don't spend the money on education, there's a penalty. Well, who cares? I mean, that penalty is not that big of a deal because you've had years of this thing growing without any capital gains exposure. And so even if you're planning on using your 529 money for your kids' education and you give them the Keith Tyner plan of, hey, you could have this money for whatever you want, don't let the penalty stop you. I mean, that money could be easily transitions toward a business or a house or some type of vehicle to give you a leg up.
I'll throw out other tinier efforts in this battle against the inflation of the university, because I had some really good classes in the university, but I also had some really bad ones, like some things that were of no value or seemingly no value to me later in life. And so when I process that, I've had some ridiculously great value training since I've been out of college that costs a lot of money. Like you and I both took a class that cost $5,000 for 4 days last year, right? And so that would seem like that was an expensive class, but is that class more expensive than a class that I sat in that I paid $1,000 for and didn't learn anything? And so that process is hard to normalize in the conversation of education. I think if I was a college president, I would argue for education, right? That would be my motivation. But what I would do, I think personally, was argue for revamping what an education looks like. How do we prepare students to do what they want to do and get all this junk out of their curriculum that's not going to help them get there? So what I did with my oldest is I deposited her money in her checking account every semester. And she goes, why don't you just pay it? I go, well, because this is your money. And when it leaves your checking account, you're going to know how bad it hurts to send that money away. This is your money. And I would, one of her last classes I completely disagreed with, and she told me about it, and we're not going to go into it here. But the only question I could ask her is, I broke that class down to how much money she spent for it. And I said, well, did you get your money's worth out of that class? And that's the reality of what an education is. It's not a diploma. It's, what are you teaching me this hour in this class for the next semester? And it's not about the diploma. If it's about the diploma, I would highly discourage people from going to the university.
Yeah, John Paul Getty. I think I've mentioned this book, his biography, on this show before, but yeah, I just love what he said. And now he went to Oxford. Okay, Oxford, a pretty cool place, I'm sure. But you know, he said they afforded him the opportunity to think, not just to learn. And I've always loved that. But I'd be curious if any of you went to college in the late 70s and early 80s. I mean, here's some real numbers for you. You weren't in college yet. What year did you graduate college?
83.
Hey, oh, you're there.
I'm your target you're talking about.
Okay, Keith, here you go. 83? For real?
Yeah.
Oh, man, check this out. Okay, let's go back in time.
Wait a minute. I think he just called me out. Did you guys see his body language when he said that? I'm offended, but go ahead, Doug.
Okay, check this out. So Keith is our case study of the day. So when you entered 79 here, we're looking inflation rate. I'm going to go back to 78 because it's more dramatic. 78 CPI inflation 3.47. Okay. 79 7.95. Here we go. 80 9.5.
Wow.
81 12.4%. 82 13.4%. I mean, you go out from 78 to 88 and it comes back down to 7.62. And so what's this next 3, 4, 5, 10 years going to look like? I have no idea. But here's my inflation. Here's the way to combat inflation. This is the phone call that we've been getting all the time. Keep reinventing yourself. Spend money on yourself. If you're 45 years old, if you're 55 years old, if you're 70 years old, spend some money reinventing yourself, training yourself, learn, read some books, be inspired. Because if you're making a wage out there, guess what? Your wages are going to be going up. And so the working class could benefit from this, especially the one who's creative. And if you're spending money on yourself, making yourself relevant 2021, 2022, 23, 24, you're going to have an exciting future ahead of you, and you're going to be able to keep up with inflation. So that's my exciting piece for you. That you don't have to go back to college, but keep learning and spend some money on yourself.
Well, I'm going to come more sociologically towards inflation. And inflation, I would argue, is generally directed by your government. It's not you and me. It's decisions your government makes. And so if you go back and study inflationary times, you'll be able to correlate those inflationary times. You can look at Venezuela. You look at wherever you want to see where those high inflationary times, and go back and see what caused it. And ultimately, it's going to be the government. And so what inflation is, it's the most damaging tax to the underprivileged people in our culture. And that is not you and me making that tax on those citizens. It's our government's decisions that tax those people. And the basic way it works is Amanda, if you know, she crossed over to this status, but prior to graduating and getting into the workforce and having a house, Amanda would have come out with just a base salary and trying to accumulate some wealth. So she would have been on the lower spectrum of things. And so when inflation kicks up, the cost of housing, the cost of everything that is a possession goes up. People might think they're getting wealthier, they're not, but the cost of those goes up. And so it makes it more difficult for a college graduate like Amanda to jump on board to the inflationary thing. And so her wages may go up, but they may not go up as fast as what's going on with the inflationary thing with assets and property. And so that's where the tax happens to the lower. The wealthier people they'll maintain their wealth because they have things that go up, but it's the lower income, the lower wealth people that get punished the most by that particular tax of government.
The one that ticks me off, the one that really ticks me off for all you non-Tesla owners is, when I'm going to the gas station today and I'm thinking about, everybody's buying gas. If you're a lifeguard at a pool, or if you're a heart surgeon, you're buying gas. And that's a tax. As it goes up, that's a real heavy tax on the lower wage income earner. And so this inflation stuff, it really hits hard for the people who are maybe capped at their income levels. And so again, good time if you're there, good time, reinvent yourself and take some risks.
I guess I was kind of tying inflation back to education. I've just watched what's gone on in the country's education systems over the last year or so, and when I left campus Wednesday with Caleb, I may forward this to Dr. Jackson at Murray State, but the thing I think a university should teach, more importantly than anything else, is that if you're at our university, you're here to learn how to take risk, because you've risked a lot of money to be here. And when you go into the world, you need to be a risk taker, because you need to take what we've taught you and convert that into something that expands value to the world. And that is a risky proposition. And I think what's gone on with COVID, a lot of universities have taught students how to avoid risk at all costs. And that is the absolute wrong decision for students. So that was my takeaway from my visit to campus this week.
I think the bonus, this is a great topic today.
We're running out of time.
Shoot. I think the bonus for a lot of people in college, or maybe you're finishing up your last couple of years in high school, is there is upside potential for you. You might find that person that you want to spend the rest of your life with. You may want to upgrade your car when the semiconductors come back online. You might want to move to a different location that you've been raised in. There's so much opportunity just built in. And so having that young mindset, man, it doesn't get much better than that. And so if you are there, whether you're old or young in age, but if you have that mindset, this inflation thing should not scare you. You need to go for it. That's all I got.
Yeah.
That's a great note to end on, I think.
I'd say hit the ground running, youngsters. See you guys soon.
Happy Father's Day, guys.